Good morning, everybody. I'm happy to welcome you all here to this live trading session. What I'm going to do today is we are going to actually do trade together. As you see that this is the live trading account, and I will be taking live trades. Market permitting, that if we get some good setup, I will be taking those trades. So the way we trade, and I want to give you a very short explanation of the way we trade. We have a set of rules, and this is the price behavior rules. And if you guys want to have a more detailed understanding about price behavior and how we use it in trading, I have given 4 seminars on FX Street. They are available on FX Street in the transcript, and they are also available on our site, spyglasstrading.co.uk, and you can go and visit and watch those 4 videos. The essence of price behavior is that trading today is not what it used to be. There is a difference between technical analysis and trading. Technical analysis is looking at technical indicators and trying to make a decision based on those indicators. These for me is mundane stuff that does not work anymore, and I have an argument and the reason that these indicators does not work anymore, and I'm sure all of you have had similar experiences, that you would be taking a trade based on an indicator, and then suddenly you see that the market reverses and goes into the opposite direction. So price behavior is now a way for us to understand how to approach the market and how to trade. From my experience and the years that I was trading on the floor, I was not a floor trader, let me clarify that, but being on the floor and technically giving the trades to my team of traders and on the trading desk, we did not have time to look at an indicator to turn around and get me a buy signal or a sell signal. Things would change immensely. So we had to look at the price action so that we can react in a more precise and a timely way to the price action. We needed to take trades. We need to trade every day. Oh, he's kind of slow. So the bottom line is we need to decide where are we going to buy, where are we going to sell, what is our bias into the market, because as traders, our job is basically we have 4 simple jobs that we have to do. That's all what we have to do. We are supposed to take only the high probability trades. So if the market has a high probability to go up, then I want to be a buyer. If the market has a high probability to go down, I want to be a seller. 2, I need to be able to identify and quantify my risk on the trade, how much I'm going to lose if I cannot make money on that trade. And every trade has an equal opportunity to be a winning trade or a losing trade. Third, I need to analyze all the data that is coming at me, and I have to do that at the high speed, at the speed of light. The faster and the sooner I can do that, the better would be my trading decision. And okay, do you see 5 charts or 1 chart? So 5, lovely. Okay, I'm going to move to another workspace now, which is what I'm going to, and now you see 2 charts. Okay, good. The first thing we do is that we have what we call the radar screen. Okay. In the radar screen that you will see here, what we have is, as I said, we need to have a an indication which way we would be trading. And we need to have a bias. So what we have is, you see at the radar screen here, is what we call the long points, the short points, the structure long, the structure short, and we also have the long stop and the short stop. You also see that some of these points are green and some of them are red and some of them are white. So if the prices goes above the long point, this means that our current position is we have to be long, and that's what you see. For example, the long point, let's say in the dollar CAD, is green. So this means we are long the dollar CAD from 103.39. Also, the dollar Swiss, it is 102.78 and it is green. This means that we are long from the 102.78 and the structure long is the 103.71. And if it's red, for example, the pound yen, we are short the pound yen from 148.03 and our structure short on the pound yen is the 146.74. All these long points and short points, we do them and we plan them together with the team of traders that are with us. We do that on the Sunday session. We do every week a 2-hour session every Sunday at 1900 GMT. And it is a live session and we record it and we upload it on the website so that people can go and review these long points and short points during the week. And these are the points that give us our initial bias. So, for example, right now, I am looking also, so now I will have a bias. So in the dollar CAD, my bias is to the long side. My dollar Swiss is to the long side. The dollar yen is, I am short from 92.27, so my bias to the dollar yen is to the downside for the time being. The pound CAD, we're long from 166.35, and the pound Swiss from 164.31. And these are our biases. So I know now, based on the homework that we do every Sunday, which way I should be trading today. And I will be taking these long points to identify the direction of the market, which way the momentum is, which way, if I'm looking for a pullback, I'm looking for a retracement. So again, you want to be buying those retracements so that you can take the trade into the direction of the market. So that is the general bias. The second thing, again, this means the bias will give me the high probability trade. The second thing is as I said, I want to identify and I want to control my risk. Here what we have, what we call the OR size, and that is the range in the morning that takes place. And we calculate the range based on time and the number of trades that go through within a specific period of time. And that changes. It is not a static number every day. It varies. And this here is what we call the average of the range, which has happened over the last 30 days. Yes, I'm going to explain all of that, Dr. Oz. The average is 15. So if we look at let's say the dollar CAD, the average range is 15 pips. Today up till now, within the first 40 minutes, it's 13 pips and 90 cents. So this means if I take a trade, then my risk on this trade is going to be, these are my risks on every trade. So I would know that if I take the dollar CAD, my risk is 15 or 14.50 cents. My risk on the dollar Swiss is 13 pips and 80 or 14. You can round these numbers but you do not want to take a stop less than these, because any stop So for example, if you want to trade the pound yen today, the pound yen today is 43 pips, 40, and the average for the last month was about 22 pips. So today's range is actually 193%. So my risk on today's in the pound yen is too big, it's too wide, and the bigger that range is a negative indication to which way the market is going, because that range plays two things. It gives us my risk every single day or every single session on every trade, plus, no, where do you say 5? Here, there it is, 43. Well, if you see 5, then it absolutely is ridiculous. But it is not 5. You're looking for something wrong. It's 43, 40. The euro pound? Yeah, the euro pound today, as of this moment, is 5.8. You don't have to take the 5.8. You have to you increase that. But this means what? This means that the euro pound today is a good candidate because your average range today is 3/4 of the 76% of the average range. All what it does, it brings to your attention now that these, again, you as a trader, you want a primary thing. You want low risk trades and you want to maximize your position. So as a trader, you want to minimize risk and you want to maximize position. This by no means tells you have to jump in and take the euro pound, but it is actually makes it a candidate. So in this, I am looking for the ones that give me the smallest ranges, because the smallest ranges gives me two reasons to be trading. One, it is a low risk on the trade. I will find out if I'm wrong at a cheaper cost. Two, they are more decisive markets. Okay? So again, it makes it a candidate. So now let's see. I want you to look with me here so that we can pick together the ones that here, what we call in the open, the ones with the smallest percentage. Anything that's less than the one, anything that is a fraction of a 1, or so it is a fraction of. So if you look at that, you can see that the euro pound is one of them. It is 76%. The euro Swiss is also good range. Everything else is over the average, especially the pound yen is too big. The dollar CAD is okay. The dollar Swiss is slightly too big. The pound CAD, absolutely perfect. Who said the pound CAD? Absolutely, Phantom. That is a good one. So now we can make an initial selection. I want to be looking at the pound CAD. I want to be looking at the euro pound. I want to be looking at maybe the dollar CAD and the dollar Swiss. So these are the primary 4. And I go now to my, you see that I switch now to the 5. You see that? I want to make sure that I can see them now. I started the second computer so I can see. So what we're going to do quickly now is I'm going to change my selection. And also let me show you something. Now the radar, now you can see now that it is beginning to give me signals, because now we have the set of rules. The software is programmed to follow the rules, so I know what is going on. And you can see that these are not in alphabetical order. Whatever comes up with the signal, so the pound Swiss now is coming up with the signal and it is breaking below the range. And I do have the range is decent, so it might be a good candidate for a trade. So with that, I'm putting the pound Swiss. And if you see now the chart, on the daily chart, you can see the daily, that one of our structure points is the 165.65. We already broke that and we broke through the range. And this is a huge momentum to the downside. So that is a candidate to go short. Okay. So what I did is, that's for example the pound Swiss. This is my range for the day. That is the momentum. So the high probability now is to the downside. It is breaking below the structural point. So I initially took the short, and that's the open position right now into the dollar, the pound Swiss. Let's see what other pairs we are looking at here. I'm going to leave the position up there so that you can see. And this is how we trade in the room, and every day. I mean, the room is open in our SpyGlass for about 24 hours a day. We communicate by voice and video like this, and all of us pick up the trade. You see the second screen now. I want a volunteer to tell me if the screen goes on. So now I'm in the auto workspace where you should be seeing 5 screens. Okay, lovely. Okay, somebody is asking a question: how do we draw the structural point, and when do we do it? Okay, let's see, the dollar Swiss now is breaking down from here, so that I have now a sell signal for the dollar Swiss. And this way I am managing see the radar screen. The radar screen tells me which pairs I should be trading. So the dollar Swiss is breaking to the downside. Okay, lovely, lovely. Can you see the radar screen, gentlemen, ladies? Okay, so now these are the pairs that, of course, there is nothing 100%. Again, you make a judgment call. This is your autopilot, and the final decision I make and you make. That's why in the morning we're picking the high probability trades, the ones, I understand that we're going to get out of that's why I'm not taking the dollars. We'll be trading it. But again, I've got the trade, and you see here now, this is already 6 pips. It is at the lowest of the day. That's why there is no other signals taking place, because what cancels? Yes, of course, I have a stop in. My stop on the pound Swiss is 17 pips. It's on the other side of the range. So my stop is right there on the other side of the range. You have your market side over here, this blue line. This is the market side, which it is not a moving average. It is actually taking the number of trades that is going during the session. You see this one ended in the European session over here. This one is not, there is no contact, there is no continuation, so it's not a moving average. So my stop is on, if it gets above the 66.53 or above the 66.55, on either or, that is my stop on the trade. I took a trade, just one. I didn't take many trades because of the news that's coming out. I want a volunteer to look at the news for me. Just one volunteer, please, because we will try to take a trade on the news. Thanks for the range of the session. So as you see there, it says here, and there is no signals under the signal. The only one that's moving is the dollar Swiss. It's coming back inside the range. The CAD, the dollar CAD, there is no signal. So everything, it seems that the market is waiting for the news that's coming out in 2 minutes. we're counting about on the intraday about 30 days. That gives us a good handle on the market. And because again, these things change, the session changes. Sometimes the Tokyo session is the one with the most volatility and the most action. Sometimes the European session is the one that has the more action. Sometimes the US session is, so it depends which session works, has the volatility, and that is based, the range tells us, or the OR, the opening range tells us, and again, I do not want you guys to be taking the idea that opening range is a system. Opening range is a component of a major package of a 21 set of things that you have to take. You cannot, the reason I took this trade is because it broke, and also the second part of the trade is the momentum. And once you have a set of rules that are clear and understood by you, and you know why you're doing it every time, then it is easy to find out that you're wrong, and it is easy to take the trade, to get out of the trade if it doesn't work. Okay? So again, we're waiting now for the news to come out. It's in 1 minute. So I'm just going to put my stop on this, if it bounces above that, then, okay, so I already have a stop market in the pound and Swiss, and I will show you where my stop is. Okay, that is where the stop is at right now. That is the stop market right there. I hope you can see it. Okay. And now I'm going into the news. The news is coming out. If somebody, okay, somebody has the news. Somebody can tell me what the news is, because I don't have. Alright, let's see the news. We can measure it now. Now here with the delta and the retracement, I can begin to see which way the market is going. So as of now, the dollar is slightly breaking initially to the downside. You can see that the dollar Swiss came down about 2 pips. The dollar yen, there isn't not too much action. So far, it's only broke 1 pip. It's only broke. So just, this is the break, the reaction to the news is 1 pip. Okay. And even this, there is no real follow through to the downside on the news. So I don't know what the news is. All what I'm looking is now at the behavior of the market. So now this is how we use. Okay. So if it's bad news, then I must see that the dollar is crashing. Okay. If it doesn't crash and I don't have anything here, this means that even you and I, or the people on TV, the talking heads are saying it's bad news. Well, voila, the market doesn't behave that way. So let's see. I'm going to take a look at the dollar Swiss. And if that's the case, I will actually, again, we trade what we see. We do not trade what we think. Being the bad news or the news is bad, this does not in any way affect my decision to take the trade. If the news is bad, then the only proof that the news is bad is the market, and that means that the prices should capitulate. Okay? So that is the dollar Swiss, and I'm going to show you how we trade it right now. So if somebody says that the news is bad, okay, this thing is not breaking to the downside. Okay, so I'm going to give it 1 or 2 more minutes. If it gets above the market side over here, if it gets above the market side, guys, then I'm going to take the trade to the upside. You cannot trade the news based upon what we perceive it as good or bad. Okay? That is more of a gambling style of trading rather than professional style of trading. we had to trade every single day, whether there is news coming out, whether it's unemployment coming out, whatever. That the way we traded is, if the news is bad, then based on the rules of price behavior, is that since the price is the collective perception of all the traders, if all the traders and the market perceive that this is news, this is bad, then this thing is going to capitulate. So let's see the yen test. So right now the dollar is weakening against the yen. You see, when you see this percentage being red, this means that the dollar has broken to the downside, and it's already down 12 pips. With the radar screen, I can see all the markets, and the pound yen is also down 12 pips. The Aussie yen, so the yen is strengthening across the board, but all the reaction to the news that came out, guys, is 8 pips on the dollar yen. That's all what it came in. 8 pips on the dollar yen, and only 1 pip. These are the pips. These are the negative moves. These are all the negative moves here. And this is the way we quantify the strength or the weakness of the market. I don't need to flip between 100 charts to find out. So the dollar yen is down 10 pips. There is no negative reaction in the dollar Swiss. There is no negative reaction in the dollar CAD. The pound Swiss is not doing anything. So the only reaction is like somebody said, into the good for you, Amarinda, good for you. Now, let's see, I'm trying to put up a trade. See what the pound Swiss is doing. It's basically doing nothing. Okay, the Aussie yen has, I mean, do you see the second, the workspace, the second workspace? Okay. So you can see that the euro yen has broken to the downside. So if you want to show the euro yen, the Aussie yen to the downside, and the dollar yen, and you can see all of them. You can see, I trade whichever session I'm in. So right now I'm in New York, so I'm trading the New York session. In the office, Mike Douglas does the London session, and we do the Tokyo session. So basically in SpyGlass, this live room that you see, we trade the 3 sessions live. There is always one of the traders of SpyGlass is in the room. Everybody in the room has an interactive. They can manipulate these charts, because these charts, the TradeStation is uploaded on the company server, and everybody in the room has the ability to control the image. And so all of you, if you're in the room, you can be changing the symbols, buying and selling, I mean, in your own account, but you will be looking at the chart. And there is one of us always there trading. I mean, everything that we do in the room is live like this. We do not use simulation. We do not, because I will not have somebody teaching or somebody leading the people in the room, just saying I should have, would have, could have. That's not the right way to do it. We lead by example. If I took a trade and I'm not making money, there's no shame in that. I mean, you don't have to take the trade personally. You have to do the right thing. The bad thing about trading is if you do, it's not how much money you made or lost. If you follow the rules and you did the thing consistently like you do. So anyway, the dollar yen is kind of holding again. So that is again is a short, and I'll put the system on the strategy so that you can see. It's a little bit late right now, so that I'll show you where the strategy would have taken the trade. I'm turning on. This is how we do it every day in the morning. Today I did not do that because the news that was coming out, but I'm going to start it now. You do the portfolio selection the first thing you come in the morning at 8 o'clock. Before the session begins, you do your portfolio selection, you identify which pairs you're going to be trading, and then you come into the what we call the auto workspace, like what you see here, and you turn the automatic execution on the pairs, because you cannot manage manually more than one or two pairs at any one single time. And this thing, you need something to get you into the trade immediately in the best possible time to get the best entry, and you need something to get you out of the trade at the best possible exit. So while the software is coming up with the... Now if you look here to the bottom right hand side of the screen, this is the dollar Swiss. See the dollar Swiss on the right hand side of the screen when I have the cursor down there? So even the news came out. Don't know why it's doing London. Even the news came out. For some reason the network is rather slow. I don't know why. So if you look at the dollar Swiss, guys, you will see that it is trading now at 106.54. It is inside the range. It is pretty much close to what we call the market side, which is the blue dashed line. And that is, for me, that is a sign of strength. That does not indicate this thing is. Oh, yeah. Okay, now. Now it's nothing, hopefully. Okay. So for example, this was the trades that was taken this morning. I'm going to show you the trades that was taken this morning in the London session. We had two trades, the guys that were trading the London session, I was not. You had two trades. One trade was it took the pound yen at 140.60, and it closed it when it came below the market side, and then it reversed. So the first trade there's something with the outcome, guys. I don't know what is it. It's just tweaking the computer. Okay, this is this morning trade in the London session. It took a buy. You can see it say buy 10, which means one regular contract at 140.63. And when the market reversed, it closed the trade. And it went short at the same price at 140.64. And it is now at the end of the session, it closed it at 140.23. So it had about 40 pips on that trade. That's the dollar yen. So now I'm going to change that from, instead of trading the London session, I'm going to turn off the London session, and I'm going to turn on. It's like a light switch, because you don't want the computer to be processing every single, it's going to be too much and too fast for it's going to take a lot of processing work. So now this is the London session. I'm sorry, the New York session, and now it's calculating, and we do that at 8 o'clock in the morning. And right now you would see Every blue line like this, that is a winning trade, and that red line is a losing trade. So yesterday, it took a short, and that trade did not work out. It turned around when the market reversed. It took a buy, and it closed the trade at the end of the day. And that, of course, that's what you want. You want to take something that works. If you take a loss, you'll be able to turn around. And so right now, this is the pound yen. We're short the pound yen from 140, and it is trading now. And let me show you the trade manager. Okay, these are the strategy positions that we have right now. So the pound yen, let me. So these are the positions that we have now. We're short the pound yen, and we're short from from 140, and it is now trading at 139.58, and we're up on the position right now, $516. So let me put the other positions on so you can see them. Now we look at the pound Swiss, the dollar Swiss. This is not. Let me put the. Now this is the pound Swiss, guys. I want you to see this quickly. Yes? It was a high risk trade, Dr. Audi, but it came out and it took the trade, so you have to take it. But a high risk trade, this doesn't mean you don't take the trade. It means that your stop is bigger and you should be risking more, but it's working. So that's what I mean. That's why you have to follow the rules. The signs that we have based on the rule give, and let me take the dollars. After the bad news, it did not follow through to the downside. So, where will I take profits on the pound yen? Okay, that's a good question. We're short the pound yen, and I'm looking now for the 139.33 right there. Point and place them for you on the chart. So while you're trading, it automatically tells you where the structure point is. And the structure point is based on the structure of so it's like a building, the ceiling and the floor. So right now, it plots it for you, so you don't have to run around and say, why is this or why is that? And that's it. So I'm looking for it to come down. Okay, if it gets now to the 139.33, this is where I'm going to make a decision, and I'm going to see how it behaves there. Now, I do have a slight problem over here, and the problem is what? Here in the pound Swiss, I am short the pound Swiss. This means I am short the pound and I'm long the Swiss. Okay? In this here, I am long the dollar and short the Swiss. So I have an upside position. My position is upside down. What does upside down mean? It means that I am long the Swiss. When you're short the pound Swiss, this means that you are short the pound and you're long the Swiss. Here, I am long the dollar and short the Swiss. So what happens is my position is upside down. Let me show you. It's the old math. I'll show it to you. So I'll write it. So if I am short the pound Swiss, so let me close this first. I'm going to close that immediately. Okay, because I'm upside down. I stayed with the winning position. I'm going to explain why that. So if I'm short the pound and I am long the Swiss. Okay, that is my being short the pound, long the. Hello. Okay, I'm using the camera now. All right, can you see me now? Okay, good. Yes, now I can see. All right. So, as I was explaining to you, good. As I was explaining to you right now, if I'm long the pound, if I'm short the pound and long the Swiss, and I'm long the dollar and short the Swiss, so the Swiss will offset the Swiss, and I would be effectively long the pound dollar. So exactly, so this way I made a, what we call an executive decision, which way I want to be with, as far as the Swiss goes. If the dollar, and you see right now after the news came out, all of you said that the news was bad and we were looking for a worse decline. Now this indicates to me that the market is saying, as far as the dollar Swiss goes, this news is not as bad. So if it is not bad news, this means that everybody that was short the dollar Swiss coming into the news is going to effectively now start covering their shorts, because they will realize that they have made a mistake. So effectively they will try to cover their losses, and the only way they can cover their short position of the dollar Swiss is to buy it. And if they buy it, they're going to create momentum to the upside, and that's what I'm trying to do as a trader, because my job is to take advantage of other traders' mistake. And if I can identify the sections on the chart or the price point on the chart where the majority of the traders would decide that they have made a mistake. Now you see the euro yen is coming back up, the pound yen is holding, the dollar yen is pushing back up. So all of this is telling me that the yen is weakening, the dollar is strengthening. So now I'm going to look at my position, and I want to see, these are the positions that we have right now, and I want to take a look at, and as of now we're still up about 520 bucks on the pound yen and the euro yen. So I'm going to be careful. I do not want this to go back below $300. If it goes below $300, I'm going to quit. I'm going to close the trade and get out. So I'm going to let these, I'm going to minimize this window right there so I can see what's going on. I'm going to leave it down there. And you see my dollar Swiss is pushing higher. So if it gets above the range right there, so if it gets above the high of the range, which is 67.16, then that will be a poor price point. I took out the pound dollar, I took it out at a loss. So I lost on the pound dollar about 17 bucks, 17 pips. So let's see now what's in the radar screen so that we can see the market. Now, Also, if you look at our long-term position, that was also another reason why I took the dollar Swiss. If you see here that based on our long-term planning, or the planning that we do every Sunday in the Sunday session, is that we are long in the long-term position. We trade long-term and short-term. So in our long-term position, we are long the dollar Swiss from 102.78. It is now trading at 106, so we're up on the long-term position about 400 pips. We're up on the dollar CAD about another 400 pips, and I will show you these positions in a minute. We average the guys that are with us in the room, the guys that come and do the Sunday session. We do an average of about, let's say, around 1,000 pips a week. We do using many accounts. We do an average of 1,000 pips a week, and we record these trades. So every trade is live. I mean, none of our trades is simulated or stuff. So we take these trades live, and the traders that come to the Sunday session, who take all the trades that we identify here on the long term and the short term, they use these trades during the week as a price point. So right there, you can be sitting at the beach and you see that the dollar Swiss goes above the 102.78. You want to be a buyer. That's why it did not take too much effort from me to go in and buy the dollar Swiss, because I know this thing now, on my long-term position, based on my Sunday session, the trade planning session, that the dollar Swiss is in an uptrend, and you will see as soon as the chart comes out, you will see where did we go long, and you'll see that we're an uptrend. So if it's an uptrend, and now if you can see the chart, you see that my position in the dollar Swiss is getting green. It's getting stronger. Why? Because I'm taking a trade in the direction of the trend. So yesterday, if you look at the chart yesterday, you see that yesterday was a down day in the dollar Swiss. You see that? Everybody would go out there and say, oh, let's short the dollar Swiss. No. The rule is in trading is that you want to be trading in the direction of the trend. And if you get a pullback, one day decline, by no means is a trend change. By no means it is a reason for you to get out of a long position. That pullback is a gift from the market to you. It is a present. Because if you wanted to buy the dollar Swiss, this is where we long the dollar Swiss. I want you to see the structure point where we bought it. Look here on the radar screen quickly. Our structure point over here is 103.71. Okay? That is the number 103.71 right there. This is where we bought it. Now, if you came to the Sunday session and you see that this was our structure point to buy it at 103.71 and you missed it, we have to find another point to give you a second opportunity. This now is your opportunity. There is one structure point to the downside, new idea, which is the 105.90. Okay? So this decline here, this red bar coming down, is not a negative thing. All what it is, if this is the move from 118, from 103 all the way up to 108, it has moved 500 pips to the upside. So if it comes back 100 pips, that's not a bad thing. That's a typical healthy behavior in the chart. And if I know, and if I do my homework and I identify my trades and I calculate my biases, then I know that I should be trading to the upside. You guys need to refresh your screen. Okay? So, I know all of you have been asking, Sandy, I mean, we're running about one slight hour, half an hour left. So, a lot of you are asking about the structure points and the long points and the short points. And we had some technical difficulties today. So, here's what I'm going to do. If you like, guys, to join us for the Sunday session. I will have them prepare something like for the older students of FX Street. I called the office now to prepare something like a special offer or something for you to come in and just take a look and write these numbers. Once I get the PowerPoint, I'll show it. The euro dollar, I'll be more than happy to open. The structure point for the euro dollar, you can just look at the chart. We upload this radar screen at the end of the session for everybody, so that you can look at it. So the euro dollar that's your structure point. We're short the euro dollar from 143 right there, the 143, the structure point. And you see that's what you want. You want to short it from a structure point and capture the 700 or 800 pips to the downside. That move up, I think Dr. Audi was asking me, that move up. You see that move up, guys? Let me show you. Now, this is how we trade price behavior. Once I break below the structure point, I want that's the structure short. Now, this move up here, this counter trend move, doesn't mean that the euro has changed its direction and it is going to go up and now I need to go long the euro. No. The economic and the fundamental aspect of the fundamental story and the bearishness of what's happening in the euro now, as soon as it broke the structure point of 147, I mean the real structure point is 147, one day up doesn't mean that the economic situation is changed. No, that means I should take advantage of these to actually go short again over here and take it down. Guys, a lot of people ask this question. It's a very good question, whether it is support and resistance. Okay, and what does a structure point mean, and what is I'll give you a very quick explanation. Every point on the chart, every trade, every tick is a point of support and it is a point of resistance. Okay? So, for example, the daily high is resistance. A daily low is support. Okay? Now, if you are going to trade simply, let's say that this is support and I'm going to buy it, and this is the resistance, I am going to sell it. Okay? Thank you. So he gave you the answer. If you are going to simply buy what you perceive as support, and you are going to simply sell what you perceive as resistance, that is, and I'm going to say it because I don't have much time, that is suicide. Okay, I'm giving you such a profound word so that you can remember it. If you simply go into the market and you say, I'm going to buy support and I'm going to sell resistance, I can bet you that your account does not represent that this thing has been working. The rules of trading is this. The first thing you have to do is identify the market conditions. What kind of a market I am in? So let's take the euro dollar. Okay? Now, there are two basic rules. I'm going to share them with you right now. This is my gift to you. I'm going to give you two presents today. I'm going to give you this rule, okay? And I'm going to invite you. I'm going to give you, I'll have because of the technical things, I'm going to give you, have them give you like a present to get into the Sunday session if you want to join. Now, the first I'm going to write, if you first have to identify the market condition. The key is market condition. Now, I want you to look at this chart quickly, guys, and look from the peak to where I have this yellow ellipse. What is the market condition here? The market condition here is, I'm going to give you. What is the market condition here, guys? Forget support and resistance now. Forget support and resistance. I'm going to teach you something, Bill, that makes a difference. Okay? That is a downtrend. If you exactly knew, if you have a downtrend one way, trending down, then the rule is, now your trading rule is momentum. If the momentum is to the down, then support is meant, when you see support in a downward momentum, is meant to be sold. If the prices break below the momentum low, your job is to not buy support, is to sell support. Yes, sir. So in this case, that is right there. If I'm looking at this chart, this is now my support, right? This is now my support. Let me, for some reason, it's scanning. This now is support, guys. You just wait for a retracement. Absolutely. Let me stop this. For some reason, everything is. So right now, your job, because now the market condition is trending and the market condition is trending down, this means that if the prices come down back to support, if it comes back down to support, you are supposed to sell it, not to buy it. If you buy it over here, if you buy the euro dollar at, look at this, all what I did is identify the market condition. It is trending. And now my support is 142. If you buy below it. If you're going to buy, right there, because it is support, look what happens to you. It's suicide. So just say buy support and sell resistance. That is naive. You must decide what is the market condition, and then based on the market condition, you decide how you're going to trade. You decide if you're going to buy support or if you're going to sell support. You cannot do things. And exactly the second point now was the 136. It does the same bounce. It's the same behavior. It's human behavior. It does the same thing. It comes back up. Now, if it gets below the 136, I'm going to short it again. These colors is a way, in the old days, Dr. Audi, we had to write a trading plan. Of course, you can use this, absolutely, I'll explain. You have to write a trading plan, and it's very important for you to plan your trades. Okay? But I remember, I have notebooks, folders of plans, how I'm going to trade this and how I'm going to trade that, and I write down. I used to spend hours every night writing how I'm going to buy this and that, and then I'm looking at the market. I see something happen in the chart. I start looking back through my notes. It takes me an hour to find where did I write something about the instrument I'm going to trade, and I missed the trade. So what we have done, and this is part of the techniques that we teach in the course, is these lines. These are our trading plan. Our trading plan is, if it's a red line, this means if the prices, like here for example, this is my red line. So the plan is, if the prices come below a red line, then we're going to go short. If the prices come to a green point, this means I'm going to buy. So cyan line, these are the structural points where major trend changing decision takes place. Yes, I do, the long-term system we do, okay, listen, I got the PowerPoint. Let me put it up for you and then if this is the, long-term system. And this works, everything. I mean, this, you cannot trade. It works, on anything, whether it's currencies, futures, stocks, it doesn't matter. And what it does is, again, we have the radar screen because we need the portfolio selection, what I'm going to buy and what I'm going to sell. And you see now it's updating for you. And you can see under the word status, what is our position in that instrument and what price are we short at or what price are we long. So for example, the dollar, that's the dollar index. We're long the dollar index from 78, 77. And I'll show you, this is the 78 right here, 77. That is, the system took it long here. And you see these are all, this is what it says. You see where the system is of the trade? 78, 77. So you're long now, you're up on the dollar 300 pips. These are the positions on the long term. That's these are the positions that we have now on the long term positions. These are our open positions right now. And that is your P&L. And what I want you to see, so we're long the dollar CAD with the dollar yen, the dollar Swiss, the short. These are all our open positions, and you see it updating right there. But what's important, guys, what's very important, what I want you to see is that I want you to count the green positions and I want you to count the red positions. That's what you want. So you got 1, 2, 3, 4, 5, 6, 7, 8 green and 1 red. We adjust every week, every Sunday, guys. Trading is a very serious business, okay? It's not a hobby, okay? And you have to love it and you have to be passionate about it. That's why every Sunday I sit with my team and we do our planning and we record this session because that's what we want to do. And these are the results. I told you we're making about 1,000 pips a week. That's the results from last week. Okay? So, we do our structural work every week, every Sunday. It is intense. We sit for 2 hours. Everybody, it is interactive. We talk, we answer your questions. What are we going to buy? What are we going to sell? And we take our positions. The next day, we have a live account. And one of our traders is taking those trades in the live account. Win, lose or draw, we're not doing this to impress anybody. We're doing that to impress upon you that that is the way things are done. Okay? This is the way to go forward in the 21st century and how to trade. You cannot anymore use the old indicators, the old technical indicators to buy and sell. And I say that with all honesty. It's not I'm trying to sell you something. You ask yourself how many times you took a buy when there was a signal from an MACD, how many times you took a sell when you had a signal from a stochastic. And I don't want an answer. I want you to answer yourself. How much money have you made and how much money have you lost? Okay? I don't need an answer. I know the answer. And I have to ask you another question. If you're not being successful using that, and you keep on doing the same thing, what does that mean? keep on doing the same thing over and over and over again and expecting a different result, you know what Albert Einstein said about that? You cannot keep doing the same thing over and over and over again and expect a different result. It's impossible. Now, things have changed. The technical indicators, the moving average, all that stuff, this was the beginning of the 20th century when people were using the horse and buggy, and this is how to use the whip. It's a big whip factor. Today, we're using now platforms, algorithmic trading, all that stuff. Being proficient and using a whip doesn't work anymore. Okay, so we're running a little bit late. I'm trying to get you now they sent us an invitation for you so you can attend the Sunday session. What we have done is that because of the unfortunate technical problem, we're going to give you like a 30% off because I want you to come in. There is a cost, of course, for everybody to come into the room, you know, the WebEx and all that kind of stuff. So we're not trying to make any money out of that. We're just going to cover the cost. So, let me get the email that they sent me. Alright. Anyway, give me 1 second. So, anyway, guys, if you go to the, James, are you there? James? James? Okay, yeah, I can't find the PowerPoint. Just put the link to the room, please. And tell them what the code that you came up with to give them the discount for the Sunday session, if you would, please. Okay, guys, now, while I have you here, I want you to look at the Swiss, the dollar Swiss. That's what I did. I took the dollar Swiss. Why? Because the news came out. It was bad. And yet, the market did not react negatively to the news. It is kind of holding. So that's why you take the trade. You don't say, oh, okay, it's bad news. Now I'm going to go short. On the contrary, it's bad news and the market is holding up. I'm going to go long. It is how the prices behave. I do not think while I'm trading, I look at the chart, what it is doing. I trade what the chart is doing. Look at this. See this? This is not bad trade report. This is not a bad trade report. This is a good trade report. And what I'm going to do is I'm going to buy another one. And now my position is 2 lots. Why? This is one position. This is what the market is doing. This is what the market is telling me. I am not going down. I am going up. The news came out. It is not giving me anything. I am going up. So this way, I am trying to do 2 things. Take the high probability trade. The high probability is to the upside. 2, I'm trying to take a low risk trade. What's going to push the dollar down? There's nothing going to push the dollar down because it is going up. Then I'm going to go long. I took a high probability trade. I took a small risk trade. And now I had the other trade in the pound Swiss that did not work. So this should make back the money for me. And now you want to begin to see momentum coming into the market. And you see the buying coming in. These are the guys that went short on the bad news. Now they are what? They are scrambling to get out. Okay. So, alright guys. James, can you please put the thing out? We need to close in 2 minutes. I will do that newbie for you on the Sunday session. If you guys come to the Sunday session. Okay, just click on the link over here, guys. We will give you like 30% off. It's going to be like 10 pounds. I mean, it's nothing. Okay. So here is the link, James has put the link for you. And, you're welcome to join us next Sunday. We start at uh, 7 o'clock London time GMT or 1900 hours GMT, and we go up for about 2 hours. We go through all the currencies. We analyze the indexes. We analyze the commodities. I'm happy to have you guys in. I am very passionate about this. I want you all to become successful. And if anything that I can do within reason to make sure that everybody, at least if I can just put you on the right side of doing things, or I can bring a new way of looking at the market, again, and anything that you can take and benefit. And by no means what I do is the holy grail. By no means it is the one all. But if you can take some of this, add it to what you do, you will make that, you'll enhance your results. Okay? So thank you very much, guys. We're closing down. So God bless you. Thank you very much all. And, I hope to see you. James, if you can put this thing again for them, please. James, could you put the link again, please? I love you, Ash. All right, guys. Best of luck. And hopefully next time we're going to make sure that the technical stuff is working well, so you don't get, because every time this thing doesn't work well, it costs me money. And you see, guys, I'm talking to you and I'm chatting and I'm having 2 open positions and I can add to my position. All right? That's what trading is all about. That's what trading is all about. All right? Best of luck, guys. And these are, I'm putting the structure points. If somebody wants to write some of those structures for you, if you want to copy these points, if you want to write them down, you can trade with them the rest of the week. You got today, tomorrow, and Friday. If you like a symbol, the euro, whatever, write them down for yourself, and you can use them for the week. I'm leaving the long point and the short point for you. All right. Best of luck, guys.